From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 1st, 2016. In just a moment, we'll be taking a look at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. But first, I want to recap a couple of the trade suggestions made over the past few days. Let's get started here on the euro dollar, EURUSD. Yesterday, we were discussing in the live trade room potential opportunities to sell on rallies into the resistance zone. That's the pink shaded area that you see right in the middle of the chart, right around 1.1160 to 80 is that pink shaded area. And you can see what's happened over the past couple of days. Resistance all into that 1.1160 level. So yesterday, we set up a trade to sell at 1.1160. The market took us into the trade and actually fell all the way down to the green shaded area. So it went from the pink zone down towards the green shaded area, seeing 30 to 35 pips of profit as it pressured down towards the 1.1125 level. So using the trade manager that's available for download for Prodigy members, you can see at the top left hand corner it says current stop loss in pips is 0. So in other words, the trade is at break even. When I have the parameters for the trade manager set up, if it goes over 20 pips of profit, it moves the trade to break even with the stop loss. So I can't lose on the trade. I would definitely like to see another surge and push towards the green shaded area, but at least at this point, the market's just kind of stagnant between the pink and the green shaded area. So you should be protecting profit. That's what I've already done by moving the stop loss to break even. Can't lose on the trade. If it breaks above that pink shaded area, of course, we'd want to get out of it anyways because it would be breaking the resistance. The red line represents the potential stop loss on any new trades that you take or the original trade that we took from yesterday, looking for resistance here and a target back down towards the green shaded area. I'll stick with it. See if the news at 8:30 Eastern U.S. time today can cause it to take another push down towards the green zone. A breakdown of that green zone, of course, we'll look for it to go lower. But all in all, the trade did what we expected it to do. It found resistance at the pink zone and targeted back down to the green shaded area. Now let's move over to the AUDUSD, Australian versus the US dollar. This one somewhat has done what we expected it to do, but hasn't really panned out quite yet. We could see negative 17 pips on the trade. 0.7520 was the sell into the yellow shaded area. Look at the resistance it was having underneath the yellow shaded area yesterday. So we went ahead and took the short. Interesting enough, we did get some negative news out of Australia yesterday. We had capital expenditure and retail sales, both of them missing the mark and coming out lower than expected. But we didn't see the reaction that you would have expected with that. We didn't see it go down, which is negative for the Australian dollar. You would look for a sell-off. But interesting enough, it didn't do it. So we're kind of waiting for the market to catch up to yesterday's news, probably watching today's U.S. data as well and non-farm payrolls tomorrow. But definitely continue to watch for resistance into the yellow zone. If the market catches up with the fundamentals, we'll look for it to head back down towards the orange shaded area. We know what the risk is, and we have a stop loss placed on the trade that if it breaks above the yellow zone, 75.40, gets above there and starts moving back up into the 50s and 60s, we'll look to get out of the trade. But for now, I'm just going to hold tight, and as long as it stays within and under that yellow zone, I'll look for profit on the trade for the Australian dollar. Next, moving over to the NZDUSD, New Zealand dollar versus the US dollar. First thing I want to do is zoom way out here and go way out like this, and you can see the last time we were into these price levels was all the way back here into 2015, beginning of 2015. So it's been quite a long time where it made the scoop down and now coming back underneath that blue box that's on the left as support, now acting as resistance. We are in a multi-month resistance level. Take a look at that blue box. We have been challenging up here underneath the 7,300 level multiple times over the past several months. Let's begin to zoom in even more here on the New Zealand dollar. And take a look. The black indicator, the black boxes there on the chart show us resistance into the orange and the pink shaded area. So I'm very discouraged about going long on this currency pair right now. For the past several months, going back to June now, we have been into resistance and have been unable, of course, to break through the mid 7,300. So I'm very discouraged about taking a long here because of that. It would have to break through that area if I was going to really get some sense of the continuation of the uptrend. Otherwise, we are seeing some indication, especially given the Fed chair speech last Friday, that the bears are interested in this currency pair, selling on last Friday as it fell back from the pink zone back into the green zone. So if the bears decide to take back control, let's say we get some positive U.S. data on NFP tomorrow, we could be looking for this to turn back lower, head back underneath the green zone, the bottom of this black box, and a turn back lower. They just haven't done that yet, and it doesn't really 1, 2, 3, 4 days. Past 4 days haven't seen a lot of momentum yet here for the New Zealand dollar. Take it down to the 4-hour time frame and take a look. For much of this week, until just the past 4 to 6 hours, we've been contained within this green shaded area. We spoke about that during the trade room yesterday. Been contained within the green shaded area. If we get some positive data for the U.S., I think we're looking for the turn back lower, back under the green zone, and a turn back down in the direction of the downtrend towards the 7180s, 50s, or even lower into the 7100 level. But currently, we have made a little bit of a rally. Is this a false breakout? Possibly, as we look for the market to turn around and go lower. What I'm looking for is one of two things. If we're going to see the return of the downtrend, if we get positive news tomorrow in NFP, and a return of this momentum that began with Fed Chair Yellen's speech last Friday, then we look for rallies to resistance, selling opportunities into the orange shaded area or a break under the green zone. I'm not really keen on buying this. We haven't seen the buyers really aggressive yet here for this currency pair. So for the most part, I'm continuing to focus my efforts on going short here for the New Zealand dollar. So that means one of two times. Let's take Fibonacci from the resistance high down to the current low. We find the 382 sitting at 72.71, which is basically where today's candlestick, the past 2 4-hour candlesticks have closed and then opened right there at 72.41, this 382 Fibonacci retracement level of the most recent run down. So we're seeing resistance. The risk here, of course, is that it breaks above this orange zone. So if you decide to go short into the orange zone, your risk or stop loss should be above that, because if it gets above there, easily going back into the pink shaded areas. And that's going to take some negative news out of the U.S., I think, for that to happen. So what I'm looking for is resistance into the orange zone, potential sell, break under the green zone, potential sell, and not really keen on buying this currency pair at the current moment for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.